Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. So it's been an interesting, and I'm recording this late Friday morning, October 7th, as usual. It's been an interesting week in the sense that I recorded last week's video, and then toward the close, there were some rumors and worries like Credit Suisse might go under, and just kind of sometimes at the end of these declines or, during the decline, you get some sort of something to come loose in the system. So there was kind of just sort of a puke into the end of the week. And then we came in this week and had two big up days, which, you know me, 2 days, especially in this environment, doesn't mean that much. But I would say the breadth was pretty impressive, especially on Tuesday, where you had something like 20 to 25 to 1 up volume. Not really an indicator of mine, but is seeing something. I think the last time you saw it was coming out of the 2018 bear market. So it's something that can, if it comes in after a lot of selling, can sort of put in a little bit of a short-term low. Nothing to trade off of, but just flagging it in case we see maybe another 1 or 2 days like that. Maybe that'll be a sign that something's changing. But overall, nothing has changed with the primary evidence. Of course, intermediate term trend down, longer term trend down. The broad market, despite that breadth, is still unhealthy by our measures. Still triple-digit number of stocks hitting new lows every day on both exchanges. And most important to me is we're still seeing a lot of selling on strength, whether it's right away, like something pops to a new high and gets sold off that day, or whether it pops and a group goes up for a week or two, but then eventually it can't really hold those gains. So obviously until that changes, it's going to be at best a trader's market, or if you want to nibble, small positions and looser stops, or you just kind of hang out mostly in money market funds. And there's nothing wrong with that as we just wait for the bulls to, kick into gear and some new leadership to emerge. In Cabot Growth Investors model portfolio, we got knocked out of one name. We put a little bit of money back to work, kind of portfolio management, but also there's some things holding up pretty well. But we're still almost 80% in cash. That's clearly our largest position. And that's where, we're going to be putting off any major buying until, we see the trends turn up and some stocks actually get out to multi-month highs and extend higher, okay? So let's hop into the charts as usual. I'm using MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com. Nothing really much to say here with the indexes. Here's the NASDAQ. If you want to be optimistic, which, I think it's good to be if you're already a lot heavy in cash, optimistic in your mind anyway. We are retesting this low and it really hasn't been able to, none of these indexes have been able to break the low and just kind of bump, just kind of some sort of breakdown. Maybe that happens next week. Who knows? Okay. But so far it's trying to hold that low. You do have a lot of volatility on a daily basis, up, down action. But all that stuff, again, it's secondary. At this point, the NASDAQ, couldn't even get to the 25-day moving average, which is the green line, obviously way below the 50 and the 200 up here. So we're going to need this and other indexes to basically get above the 25-day line and for that line to turn up, which basically means, hitting a 5-week, being higher than you were 5 weeks ago, which, 5 weeks ago is, somewhere up here. So we're going to need a little time. We're going to need some strength. So right now it's still time for patience as we see how things play out. All the other indexes are basically the same. There's not too much to glean here. S&P 500, again, same sort of situation. It did probe. This was that Friday kind of, I don't want to say puke, but it definitely felt a little pukey there. And then the rebound. So we'll see how it goes. Mid caps, small caps, this is IWM. Again, small degree of relative strength here. Hit the 25-day line. I mentioned some of the growthier indexes held up a little bit better than some of the, value or other indexes. And I'll show you some stuff about defensive stuff in a second. But still, trend is down, mid caps and all that sort of thing. So really it's just about waiting here. Let's see, maybe sometimes you get this initial thrust. It's kind of like the first punch, that lands for a boxer. And then, it's not enough to sustain it, but maybe the market kind of holds up here. And I would say that what I'm looking for really, is today's jobs report was, quote, good, which is bad for the market. The Fed's going to raise rates, blah, blah, blah. What you're kind of looking for is for the market to start shrugging that off where, yeah, it got hit, but it didn't really get destroyed. Yeah, it got hit, but a lot of stocks held up. Maybe it didn't get hit at all, or it opened down and closed flat. 1 day or 2 days doesn't make a difference, but you start to put a few of those things together and you get something to work with. Right now, we're still waiting to see that. As I get my notes out here, one thing that I have seen is just the defensive areas where they were kind of hiding for even in the summer. This is XLP. You can just see it looks I mean, almost worse than I won't say worse than the market percentage wise, but just very persistently lower. The XLP is not only below the June low, but it's actually all the way back to its low from last Friday as of this morning. The utilities I mentioned last week continue to get nailed. Now I know it's interest rates, but you just got to kind of take the action for what it is. Again, kind of below, or at least probing below that June low here and below where it was last Friday. REITs, I wouldn't say REITs are defensive per se. It's kind of its own animal. But again, you're kind of had, at least with utilities, you can just see the sharp slide, at least with utilities. I mean, what I look at here, this is XLU, by the way. I think this was late August, and I think the Jackson Hole thing was in here somewhere, and the market got hit pretty hard. But then it even bounced back again, and then I think there was the CPI report in September. I don't really remember all this stuff, but my point is that even as of a month ago, they were still hiding in these things, and now you're starting to get these things tossed out. I'm not saying that's good per se, but you do kind of tend to get everything flushed out at some point during the bear phase before it ends. Okay, so we'll see how that plays out. On the point I was making earlier, two points I want to bring up. So this is end phase, which kind of broke here on Tuesday, I guess it was, or Wednesday, I guess it was. Huge volume and all that. Again, you're just seeing stuff that breaks out and runs, but just can't sustain it, and eventually it gets hit. Okay, and my point here is that you're still seeing strong stocks, whether it's something trying to get to a new high, sort of short term, or something that's acting well in general. Eventually, it's getting hit in this environment. That's why I'm talking about buying pullbacks or using very small positions and loose stops, sort of thing. You even saw like First Solar. Solar's kind of got hit today. It actually still looks okay, but you can see it tried to pop above this little resistance right away, boom, boom, back down. Just there's all sorts of examples. This isn't a huge one, but like CrowdStrike, it kind of rallies every time it rallies into resistance above the moving averages, back down, rallies into moving averages, back down today. We'll see what happens. So there's just different, until that changes, you're going to want to see, even if the market rallies, my point is you want to see some stocks not just do this, like, oh, wow, this is down from 100 to 70 in the last month. It's gotten killed. Now it's back to 85. Well, that's great. If you want to try to play this trade, that's fine. But for the health of a sustained up move, you want to see a stock that held up pretty well and then gets going on, decisively on earnings or whatever going forward. So that's just something to keep an eye on. In terms of individual names, I'm still looking at names that are some potential turnarounds. Coming out of bear markets, you will get turnaround names, obviously. China is one, and two ways to play it. One is Chinese stocks. I'll mention a couple in a second. One is companies that have a lot of exposure to China but aren't, totally governed by it. So here's Las Vegas Sands. I mentioned it. It's just been bottoming out for months. A lot of tight action. Support volume in here, actually hitting, I think, its highest level since February or something, March. You can see earlier this week, and finally got above a little bit of resistance here. Now, what I just said, I would almost half expect maybe this comes back down a little bit, but either way, something to flag the action. Trip.com, which is the old C-Trip, if you remember that from yesteryear, TCOM. Again, these Chinese stocks are totally unloved, and I understand why. There's regulation risk and all that, zero COVID. But, bottomed out for a while, and you're going to see it's really just kind of hung out here between 25 and 30 for whatever that's been, 3 or 4 months at this point. Again, it tried to, here's a perfect example of what I was talking about, tries to break out, immediately goes, down a couple of points, 6, 7, 8% the next couple of days. But, I am intrigued. You got some buying volume in here, so it's a decent setup. Pinduoduo, same sort of pattern on the weekly chart. And here's the daily. All these Chinese things bottomed in March. They had a kind of a retest, so to speak, in May. And you can just kind of see it's trying to etch higher lows in here. Obviously, come in next week, it gets killed. But so far, so good. Some buying volume in here. And it just kind of feels like, hey, whoever wanted to sell this thing has sold. Now, something new can come on the scene, obviously. But at this point, that's sort of one intriguing turnaround theme, I guess I would say. Biotechs remain pretty good. Neurocrene, fair disclosure, I got knocked out of this. My stop was too tight in top 10, so we got knocked out. And now the stock is extending higher and kind of, quote unquote, breaking out again. Now, it's not the most dynamic name. It's 100 to 109. Now here we are at 112. So we're not talking about, whatever, GameStop or something, But you are getting some accumulation in here. It looks like it wants to go higher, and the relative performance line is excellent. Again, you're seeing some short-term selling on strength. It pops a couple bucks, comes right back in, but so far so good. Another name in the group that showed up in top 10 is Iveric, I think it's called. Iveric Bio. They work with macular stuff, so the symbol is IC, ICEE. But you can see it's one of these speculative names. So it had good trial results, came up here, very sharp pullback, but then as soon as the pressure came off the market, you can see what happened here in recent days. I'm not saying to chase it, you make your own decision, but it would be nice to see some of these things hold up, maybe tighten up, maybe pull back reasonably. At some point, some of these things will tighten up when they're ready to get going. Academy Sports, I was talking to a fellow, well, I'm not a money manager, but I was talking to a money manager I know, talking about charts. But anyway, we were looking at charts, and he said, he's like, wow, this actually looks like kind of a real cup with handle. I don't know what you want to call it, but this is actually one of the names where you feel like, say the market kicked into gear next week. Not that this is the greatest growth story of all time, but you feel like if the market kicked into gear next week, this thing could be ready to really get going and stage a quote unquote legitimate move if it wanted to. So it's put in the time, it's put in the energy, it's shown some relative strength. That looks pretty good. And it's pure Dick's Sporting Goods. These aren't terrific growth names, but obviously already went through the ringer, and very nice relative performance line here the last few months, and has held up. It's been resilient is what I'd say here the last couple months. Had some good reaction to earnings. I know it was down that week, but it was, where are we here? You can see it's been kind of coming in here. Then it got Nike reported, so it got dragged back down. But net, it's holding in there. So maybe this is some sort of a cheap turnaround theme with some of these things. We'll see how it goes. Just running through a few other names. Duolingo, I've mentioned a bunch of times. Again, it's one of the few names. I wouldn't call this some sort of classic amazing base. The stock's a little thinner. It's losing money, blah, blah, blah. But, big bottoming action, good volume characteristics in here. And, it's a volatile stock, but, the market gets going and this thing, you can see a little bit of persistent buying showing up. Market gets going, this thing pops higher. All of a sudden it's like, whoa, what's going on here? It's hitting a 12-month high or, 11th-month high. So it's just a name I'm keeping my eye on. Paylocity, I've mentioned PCTY. Again, I kind of think on the weekly chart, you do have this sort of classic, I'm not a, traditional like William O'Neill guy, but, kind of a cup with handle thing, nice consolidation in here. Again, short term, you're seeing, the stock approaches resistance. What happens? They hit the stock. And yes, the market's getting hit today, but even so, it's not like it's holding up. It's just kind of, it's down 6% as I record this. So we'll see what happens. It looks like, the stock has been showing some relative strength, but it's a decent setup. LPL Financial, this is just, a couple of these are just examples. Not a great growth name. They're leveraged to higher interest rates. So you see the big earnings estimates over here. But again, kind of a normal correction. Pressure comes off the market, boom, to new highs. Will Scott, WSC, same thing. Nice move up here into whatever, August. Chops around from, 44 to 38 or whatever. Pressure comes off the market, quickly goes back to new highs. Not stretching higher from there yet, but overall a nice consolidation. Then you have the energy stuff. I go back and forth. So I respect what I see, not what I think, really. I try to be pretty simple about it. So there's no question that it's been a leading group. Energy's been a leading group all year for the most part, and now it's starting to show some real, type of action. Like, wow, this looks interesting. And some of the things are kind of hitting multi-month highs and stuff like that. I would say if you looked at, I'm just going to pick a random name. This is like Diamondback Energy. Not to pick on this at all. Very nice snapback this week. Could this be a shakeout? Yes. Just keep in mind, these things are up whatever 100%, and they're still kind of in this possible topping phase. There really hasn't been a lot of buying volume at all. Maybe there will be this week. We'll see how it closes, but so we'll see. I mean, it's something I'm open to, but I'm not. I'd rather see something fresher than some of these names. Be that as it may, given the action, I am going to mention CHRD again, CHRD. It's one of the closest to its old highs. It's very simple relative strength, only 5% off. And I don't think these charts are even dividend adjusted. Pioneer Natural Resources, PXD, again, you're kind of in this range, but it is showing some pretty good power. And this one has had a little buying volume 2 weeks in a row, or it will, once this week is closed. So that's one. That all that said, I still kind of favor some of the gas names. Chesapeake Energy, CHK, looks pretty good. It actually hit a new high in here during the August-September rally, which is good not just compared to the market, but compared to the group. And then it got hit here, but then it was just 2 days and then kind of right back. So they're going to move with oil prices. They're going to move with the market. There was OPEC news this week. It's still hard and choppy. It's not easy to play these things, but Chesapeake is one I'm keeping my eye on. So anyway, back to the market. It's sort of the same story. I mean, I could come on here for 60 seconds and just say, well, nothing's changed. The intermediate term trend is down. The longer term trend is down. And honestly, that's really the core of what we do, and just keep it simple. But let's see. I do, again, sentiment. A lot of people are leaning bearish. The short stock, short bonds, long U.S. dollar trade, it's very obvious at this point. Everyone knows the Fed wants to, raise rates and drain the balance sheet. Everyone knows inflation's a problem. That doesn't mean, obviously, it doesn't mean the market has to go up. It hasn't been going up. But just realize that the obvious usually doesn't work for that long in the market. So we'll see. Maybe something new comes on the scene, and I'm not going to sit here and predict anything. But let's see if we can work off this low and maybe see what happens during earnings season. Do we get some new leadership to emerge or not? Okay, in the meantime, it's pretty simple. Basically building your watch list, stay mostly in cash, be defensive, whatever that means to you is probably the better way to put it. And if you do things, just keep it light and all that. There's going to be a ton of opportunities, whether it's in 2 weeks or 2 months or 6 months or whatever. There's going to be a ton of great opportunities to really make a big impact on your lifestyle. You just got to be there with your capital and confidence when it happens. Okay, that's all the time I have for today. As always, thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.